From Washington, D.C., this is Balance of Power with Joe Mathieu.
President Trump considers a fill-in on the Fed. Welcome to the Wednesday edition of Balance of Power here on Bloomberg TV and radio. As the president's advisors recommend he nominate a temporary Fed governor to fill the vacancy currently on the board. We're going to get the latest coming up live from the White House with insights from Joe Lavorgna, the counselor to the Treasury Secretary. He'll be with us in studio just moments from now. Big announcement coming from Apple, a $100 billion investment in the U.S. That'll happen at the White House later, but Bloomberg's Ed Ludlow will join us coming up with details, and we'll have analysis from our political panel. Bloomberg Politics contributors Rick Davis and Jeanne Zaino with us all after we take a look at Wall Street. We get up to speed now on the Wednesday trade with Amy Morris, live from Washington. Amy, how the markets doing?
The markets are in the green right now, Joe. We check them for you all day long here at Bloomberg. The S&P 500 up 0.7%. NASDAQ up just about 1%. The Dow up 0.25%. The 10-year Treasury yield at 4.23%. The 2-year yield at 3.72%. Want to update you on what's been going on in Georgia. 5 soldiers were shot in the 2nd Armored Brigade Combat Team area at Fort Stewart, Georgia. Now, Fort Stewart was locked down for more than an hour during this active shooter emergency, but Army officials now say the shooter has been apprehended and is not a threat to the community, and those soldiers are being treated. This incident remains under investigation. Global sales at McDonald's restaurants rose 3.8% in the second quarter. The company says it is looking to bring back low-income diners in the U.S. since they eat at restaurants more often than middle and high-income diners. Shares of McDonald's right now nearly 3% higher. Novartis has reportedly made a takeover approach for rare disease-focused biotech Avidity Biosciences. The Financial Times reports Novartis has been evaluating a bid and expressed interest in an acquisition in recent weeks. Avidity is working with advisors to assess its options, but its shares right now are 24% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Mathieu.
All right, Amy Morris, thank you so much. We'll get back to Amy a bit later on this hour to update the Wednesday trade as we keep our eyes on shares of Apple today. It's going to be the big story in the second half of the day with an announcement scheduled for this afternoon at the White House. Tim Cook is expected to appear alongside President Trump to make this massive investment announcement. We're talking about $100 billion in domestic manufacturing. When we talk Apple, we have to talk to Ed Ludlow, the host of Bloomberg Tech, with his eyes on Washington. Once again, this is getting to be a habit, Ed. Is this new money that we're learning from Apple?
Well, the $100 billion is new. It's in addition to and on top of the $500 billion that Apple had already announced or disclosed they plan to invest in the United States in the context of manufacturing, but also direct investments into suppliers and training. But there's a heavier emphasis, Joe, on already disclosed. So in aggregate, it's a bigger number. But you have to ask questions of the what next, particularly around the president and the administration's, motivation. This is a great win for them. But Apple is not sort of saying, let's start building the iPhone in America. They're absolutely not saying that. What they're saying is, here's our existing supply base in America. We're going to support those suppliers to do more, and we're going to invest in training and ramp up on some already announced projects. Okay.
What does Apple make in America?
Yeah, it's a really good question, because it's the only question. The $500 billion that came before this new $100 billion was targeted quite specifically at a facility, for example, that made servers. Apple, like most technology companies, has its own big computer footprint. When I say computer, I mean data center on premises, and they make their own servers, and that was part of it. They have key suppliers here. Glass is one of them. Some electronics as well. They reinvest those, and then they have a workforce. And so like a lot of that investment was skilled workforce. They make Mac components here. But Bloomberg's reported, like, before all of this happened at the turn of the year with the new administration, Apple was also looking at some of what it manufactures in America and thinking, can I do that in Asia? Ironically, paradoxically. This is the thing. Will Apple manufacture the iPhone in the United States? There is absolutely no suggestion that the news today indicates that at all.
Really interesting. What do we know about Donald Trump's relationship with Tim Cook these days? Are they getting along?
Yeah, don't laugh at me when I repeat this line, because I know I've used it a bit on this program recently. But President Trump's best buddy right now is NVIDIA CEO Jensen Huang. He's kind of been the public poster child of what's happening with technology in America and the re-onshoring of industry. And NVIDIA's there with Apple, right, around the same level, $500 billion. The president has much more directly called out Tim Cook in with negative connotations. You know, the threat has been if Apple does not shift specifically iPhone production, but more manufacturing and assembling to this country, they will face a specific ad hoc heavier tariff. Now, I would note there were other media outlets that after the White House disclosed the Apple investment this morning, reported that Apple would be spared from this additional India tariff, because remember, there is some final assembled component that comes out of India for Apple, the iPhone, in smaller volume than they do in China. But yeah, the president has spoken in the public domain about Tim Cook a lot more in negative tones than any other CEO, I would say, this year. Well, Elon, maybe.
Really interesting. What does this mean for investors? Is this an event that shareholders should be paying attention to? Is it a stock mover, or this is a Washington story, Ed?
Absolutely a stock mover. You know, Apple shares are up 5.6%, biggest jump since early May. The stock in the first half of this year traded very specifically with the psychology around tariff impact and also the administration's friction. You know, we know that January through at least June, July. Actually, the stock narrative changed for Apple after that and became much more like, why aren't you doing more in AI? But a move of almost 6% in the session is very notable. This is not a move that Apple stock makes regularly on a news item like this. And, you know, one standard deviation is a 2% move. So, yeah, it's notable. And that's, sorry to get technical with you, but I want to fully answer the question.
No, I love it. That's why we called you. Ed, it's great to see you. This announcement set for just, 3-4 hours from now, and it'll coincide with the late edition of Balance of Power here on Bloomberg TV and radio. Watch for Ed Ludlow, not only here from time to time on Balance of Power when we're lucky, but the host of Bloomberg Tech here on Bloomberg Television. I'm Joe Mathieu in Washington. Thanks for joining. We just got an update from the boss, President Trump, on Truth Social, with his eyes, of course, on the deadline for Russia at the end of this week. The deadline for secondary sanctions is Friday. President Trump writing, my special envoy, Steve Witkoff, just had a highly productive meeting with Russian President Vladimir Putin. Great progress was made, he says. Afterwards, I updated some of our European allies. Everyone agrees, he says, this war must come to a close, and we will work towards that in the days and weeks to come. Thank you for your attention to this matter. Exclamation point. This follows a 3-hour meeting, as we told you, between Steve Witkoff and Vladimir Putin earlier today. No real readout coming from either side in terms of progress, besides what I just read to you from Donald Trump. But Marco Rubio, the Secretary of State, telling CNN a short time ago that we should expect some announcements in the days ahead. So the gears are turning on this story. As we also understand, the president is adding an additional 25% tariff on goods from India, which also will have repercussions for Russia. We'll have much more on this as we work our way through the hour. And it's a real pleasure as we anticipate the announcement from Apple to bring Joe Lavorgna into the conversation. Of course, economist and counselor to Treasury Secretary Scott Bessent. Thanks for coming over from the White House, Joe. It's good to see you.
Thank you, Joe. My pleasure.
$100 billion in domestic manufacturing is a pretty big deal. And I'd like to just get inside the process for a little bit with you, because we've heard a lot of announcements from corporate officials coming to the White House to tell stories like this. How does it begin? Does the White House reach out to a Tim Cook to talk about investments that could be made? Does Apple call the White House and say, hey, we've got a plan?
What we first start with is that we have to extend the Tax Cuts and Jobs Act of 2017, and that was a priority of President Trump's, and Secretary Bessent spearheaded that operation. And then I think from there, it's like, okay, what can we do to build upon the success of the first administration, where President Trump had very strong non-inflationary growth. Growth was nearly 3% for the first 3 years, almost 3.5% in the third year, right before the pandemic. And then you sort of figure, okay, how do you build the best economy possible with pro-growth incentive tax structures, cheap and abundant energy, and friendly business regulation? And you just see what happens. So,
does the White House make the outreach there? Are you calling companies around the country saying, let's
That's not
talk?
my understanding. No, I think it's one of those things where Let me say this from my own vantage point. I know that when I'm lucky enough to be in this position, people say, can I help? What can I do to help? And it could be both sides of the aisle. People really, they appreciate public service and want to help out. That's probably what happens at the corporate level, is that, okay, how can we make things better? And, of course, the incentive structure is in place for companies to want to invest here. This is like with all these trade deals that the secretaries help broker. People want to bring foreign capital into the U.S., and they're incentivized to do it when the tax structure is friendly, the energy and business environment are friendly. Like it all becomes very additive. So I think it's probably a two-way street. Yeah. But the point is that people are making the commitment, Joe, and that's unprecedented.
Well, when we talk about reshoring, that can mean a lot of different things. There was a point at which the Commerce Secretary, Howard Lutnick, suggested that we start making iPhones here in the United States, that should, in fact, be possible. We just talked to Ed Ludlow before you sat down with us, and he said that's not what this is about. There are going to be different incentives when it comes to domestic manufacturing. How important is it for the White House to have Tim Cook make iPhones here in the U.S., or is that never going to happen?
What matters is high value-added manufacturing jobs, whatever that might be.
Not people turning screws into phones.
These technologies, Joe, are changing so rapidly. But, the administration really wants to have the best high growth, low inflation, high cost, a high standard of living, high standard of living, low cost of living society possible. And those jobs take the automobile industry, very important industry, a lot of high tech, high value added type of employment. Things related to that, that's what matters most, and that's what the administration cares about. We talk about a blue-collar wage boom. Yeah. You want those kind of good-paying jobs, whatever they might be.
As opposed to low-end manufacturing.
As opposed to low-end manufacturing, that's right.
Making socks here in the U.S. again. Really interesting, the spend on AI that we're seeing. A fascinating piece of information that I saw research earlier, that the CapEx from AI is actually adding more to the economy than consumer spending at the moment. A lot of this has been announced inside the White House, of course. Jensen Huang, we think of the Larry Ellison OpenAI announcement. I could just keep on going here, the money from SoftBank. Do you worry that CapEx from AI is essentially single-handedly propping up the economy here, that it's a more narrow investment than we need?
No, because first of all, the AI has been very strong. That shows up in information processing and related equipment within the GDP accounts. But industrial equipment's been strong. Transportation equipment's been strong. We're talking about a CapEx comeback that's not just limited to AI. Having said that, when you have an industry that's growing as rapidly and as exponentially as it is, the math is going to be more additive than, say, the consumer side. In other words, we're looking at second derivatives. If something is a small but largely growing part of the economy, its incremental growth for a quarter or two is going to be faster. But the point is, if you get this CapEx comeback, tied in with the blue-collar boom we're seeing in wages, real wages expanding, consumer spending is going to be strong, and that's going to power the economy upward.
I want to ask you about the Fed. In fact, the president was just talking about this last evening. James, I don't know if we can spin that back right now, but I want to ask you about the search, because it's a very short list based on what the president was saying yesterday in his conversation with reporters. Let's listen to President Trump from yesterday.
Fed governor, I'll be making that decision before the end of the week, and we'll either decide on one for permanence or the 4-month period, the term. There's a term of about a number of months. We have a couple of candidates. I mean, everybody wants it, okay? It's not a couple, but we've narrowed it to a couple of candidates. And we've also, we're looking at the Fed chair, and that's down to 4 people right now.
Down to 4. Interesting, as we spend time with Joe Lavorgna here on Balance of Power. There's a story today on the Bloomberg about the idea of a temporary Fed governor filling the seat vacated by Governor Kugler. What would be the benefit of doing that? Is that an idea that you support instead of just going for it right now?
It would. My understanding, Joe, would be to have to be Senate confirmed.
That's right. It's going to take a
while.
while.
You have to see what happens on that, and there's only so many months. So we'll see what happens. But I don't. The president wants to do it. That's great. But we'll have to see then if you have to get the Senate on board. But in terms of just general people, so I know you want to ask you that, there's a really good crop of folks that could do the job.
The battle of the Kevins, it sounds like, and
the nice thing
your boss is not on the list anymore.
The nice thing, Joe, about where I sit right now, unlike my prior roles, I don't have to say who I think it's going to be. I just know whoever it will be. It'll be somebody that will be. You're
telling me Donald Trump's not going to ask you who you think should be the next?
It will be somebody good, Joe, who will have a very good relationship with the president. Yeah, and that's all.
Well,
that will matter.
Name game aside, why not just name the next chair now and have them fill that seat until it's time?
Well, I guess the issue would be that, and Secretary Bessent mentioned this before, and that is if you have like a shadow person, maybe that's not the best way to go.
Okay.
And by the way, the person may not want to have that shadow role because then you're sort of in competition with who the with Jay Powell at the moment. So we'll see how that plays out. But I think the key point is that, you're seeing the Fed now talk about the need for lower rates. You saw 2 governors dissent. That was kind of an historic event, hadn't happened over 30 years. You've seen some of the bank presidents now come out and think that rates need to be lowered. So I think pretty soon everybody will be on the same page.
Why lower rates now if we still haven't gotten to 2%? That's the benchmark we talked about for the entire Biden administration. Does it need to change? Should it be 3% if you start cutting now?
So the reason, Joe, a couple-fold. Number one is that inflation's a lagging indicator. So if you're waiting for inflation to move lower, if you think the trajectory is down as we think it is, you're waiting too long, number one. Number two, the tax bill is written to increase the economy's supply potential. So that means you could have fast growth, and actually as you increase productive capacity, inflation can drop. And the third piece is if you look at interest-sensitive areas of the economy, autos, housing, some pockets within manufacturing, those areas are soft. And would benefit from lower rates. And besides, the Fed itself has rates well above where the committee believes that the neutral rate is. So I don't think inflation is the fear. In fact, if anything, as President Trump highlighted, the inflation was not going to be present with the tariffs. That's not shown up in the aggregate data. If any of the numbers have been weaker. And therefore, the Fed ought to take that into consideration.
When you're telling a growth story, though, since you've been here, you've talked about the way the economy is going to grow and the way wages are going to go up. So why would it be a sin to keep interest rates where they are for a minute to make sure that inflation doesn't start moving higher again?
Because the fundamental issue is growth. Growth does not cause inflation, Joe. And there are too many people within the economics profession that believe growth causes inflation.
This is what every mainstream economist comes on and tells us.
And they're completely wrong. That's why they've been wrong on many things, including the tariffs. As my old boss, Larry Kudlow, would say, that too many people working does not cause inflation. Inflation is always and everywhere a monetary phenomenon.
Can bring inflation.
No, not wage. No, just money and credit. Money and credit creation are what drive the inflation process, not wages, especially wages that are tied to the economy's productive capacity growing. In other words, you're starting a business, you're building a plant, you're paying those workers to build that plant to create more of the goods and services to be delivered to the populace. That's disinflationary, just as you saw, again, with President Trump's first term. Very supply-focused. President Trump had very strong growth and low and falling inflation. So this notion somehow you're going to have very good growth, you're going to have a boom, and this boom somehow is inflational is not at all consistent with the data.
Is this Trump data now?
What's that?
Is this Trump data?
No.
It's not. It's still Biden data.
I didn't know what you meant by that. No, I mean, look, here's the thing, that the one big beautiful bill was passed July 4th. Nobody thought that could be done. The president said it needed to get done. Secretary Bessent worked hard with the people on the Hill to get that done, which is a great accomplishment. You've got numerous trade deals that are really making some great progress that people didn't think was going to happen. Equity markets are strong. The outlook is very, very positive. So I think we're going to see a pretty strong economy. And people know, look at the cost of living, how much it's come down already. Yes, it's the president's economy.
It's great to spend some time with you. Don't be a stranger.
Thank you,
Come
Joe.
back and see you soon. That's Joe Lavorgna, of course, made his way over from the White House. Counselor to Treasury Secretary Scott Bessent. Our panel's up next on Bloomberg. News coming from the White House today on Russia. If you were with us a short time ago, you heard the president on Truth Social talking about the meeting that took place a short time ago with Vladimir Putin. President Trump sent his special envoy, Steve Witkoff, to Moscow. There was a 3-hour-long conversation, the president framing it as productive, but it's very difficult to tell if anything significant will come from this session, knowing that only 2 days from now will be the deadline for secondary sanctions on Russia. over its war against Ukraine. We're going to have more with our political panel on this. Bloomberg Politics contributors Rick Davis and Jeanne Zaino are with us, but let's start live at the White House. Bloomberg Washington correspondent Tyler Kendall has the latest on this. Tyler, what else are we learning, and when could we hear an announcement if there is one?
Yeah, hey, Joe. Well, as you mentioned, we really just heard from President Trump moments ago saying that this meeting did make progress, but we haven't really seen many tangible deliverables beyond that, and that President Trump said that he briefed our European allies on these discussions as Steve Witkoff wraps up really what's his fifth round of negotiations with Vladimir Putin in Moscow ahead of this Friday, August 8th deadline for Russia to come to the negotiating table in perhaps a more meaningful way or face further economic penalties. And we did see the White House take at least the first step in making good on that threat earlier when President Trump imposed that 25% additional tariff on India over its imports of Russian energy supplies. About 37% of Russian oil ends up getting exported to India, so they are one of those top consumers. And this was something that we had long heard from President Trump, and it appears that he has taken this step, though that additional tariff will not go into effect for another 21 days. And it appears that could really just be the first blow in this pressure campaign, Joe, because we have a headline crossing on the terminal earlier this hour. People familiar telling us that the White House is considering new sanctions on Russia's covert fleet of oil tankers. That appears to be the next target in what has become this pressure campaign to try to get some more meaningful concessions from Vladimir Putin. And Joe, as you know, we had some pretty incredible reporting this morning that Russia might be willing to potentially suggest there be an air truce. To be sure, Vladimir Putin, the understanding is he's not going to go for a full ceasefire, but perhaps they would put on the table an air truce. So think stopping missile strikes or drone strikes that happen in the air to try to stave off some of these economic penalties.
Tell us about the Swiss, Tyler. The Swiss president got on an airplane without a formal invitation to come to Washington to renegotiate what the president deemed to be a 39% tariff. The president did sit down with the Secretary of State, Marco Rubio, who put on social media a picture of the two of them discussing the importance, he says, of a fair and balanced trade relationship between the U.S. and Switzerland, reaffirming our commitment to stronger bilateral defense cooperation, but no lower tariff. It seems the Swiss will go home empty-handed.
Right, and Marco Rubio, the Secretary of State, has a lot of roles in this administration, but he doesn't lead the bilateral trade talks. Right, so, I mean, our reporting indicates that the Swiss president did come to Washington without a formal invite from this White House, but that just really shows the pressure that the government is under to try to get a lower tariff rate ahead of tomorrow's deadline of this 39% rate ultimately going into effect. And it's been really interesting to see how these talks really did seem to go off the rails here, considering our reporting had indicated that there had been positive momentum. Now, a person familiar does tell Bloomberg News it appears the Swiss president is leaving Washington without a deal, despite putting on the table a new proposal for the U.S., but it apparently was not enough. There was a few different threads that we were watching here, Joe, but important context that the Swiss really don't have tariffs on their imports. Only about 5% of their imports are tariffs, and that's really around agricultural products, which does appear to be a red line in those negotiations. We know the U.S. would like to, of course, see greater market access for U.S. agricultural goods, but there were other places where we thought perhaps there could be some agreement, such as boosting U.S. LNG purchases, boosting pharmaceutical purchases, something that we know is top of mind for this administration. And then one that I'll leave you with that we didn't hear much of an update about, but we know that the government is negotiating some purchases of some Lockheed Martin fighter jets, and some of the reporting indicated that perhaps there could be a higher purchase price for that. But at this moment, it doesn't appear that any of the efforts were enough ultimately to get this White House to budge.
Tyler Kendall, full of news today. Thank you so much, Tyler, with the update live from the White House. As we mentioned, President Trump on Truth Social earlier talking about Steve Witkoff's meeting today with Vladimir Putin. He didn't have a lot to say, but he did call it a highly productive meeting. Great progress was made, says the president. Afterwards, I updated some of our European allies. We want to play it to our political panel. Rick Davis and Jeanne Zaino, Bloomberg Politics contributors, are with us. Jeanne is Senior Democracy Fellow with the Center for the Presidency, the Study of the Presidency and Congress. Rick is partner at Stonecourt Capital, our Republican strategist. How does this feel to you this time, Jeanne? There have been a lot of meetings and a lot of hours spent with Steve Witkoff and Vladimir Putin that have resulted in absolutely nothing. With 2 days to go here, Will we hear about a deal? Marco Rubio telling CNN we could hear an announcement within days.
Yeah, the White House is certainly heightening expectations, as you and Tyler were just talking about. But, you know, it's hard to imagine. Hopefully there is a deal. But what would this look like? I mean, Russia is winning on the battlefield. They have the advantage in terms of population. They have the advantage in terms of arms. You know, the president is talking about these secondary sanctions, secondary tariffs, and indeed putting them on India, despite the fact that the EU buys a substantial amount of energy from Russia as well. So I'm not sure exactly what this will look like, but it's hard to imagine that Vladimir Putin changes what he has been asking for so far, because one thing he has been is very, very consistent on his demands.
Mm-hmm. Rick, the language coming from the Kremlin is really something. On our part in particular, said a foreign policy aide to Vladimir Putin, some signals were conveyed on the Ukrainian issue. Corresponding signals were also received from President Trump. How do we read into this?
Not a great meeting if you're looking for a ceasefire. Look, I mean, Vladimir Putin sure has done exactly what Jeanne said. He hasn't changed his tune since day one on this thing. But the reality is it has thrust Donald Trump into the waiting arms of President Zelenskyy. I mean, the difference now is that the U.S. and Zelenskyy are unified. The U.S. and Europe are unified. There are efforts now to rearm Zelenskyy. There are efforts now to spend more of U.S. taxpayer dollars on Ukraine coming from the Hill. Mm-hmm. It's a complete change of positions than when Donald Trump took office in the first 60 days of his administration. And so good job, Vlad. You've actually done something that nobody thought could happen, and that is that Donald Trump is now the biggest supporter of the Ukraine. And with that, a unified Western approach, and he can't resist that. Ultimately, he will fail if the U.S., Europe, and Ukraine are aligned.
Wow. It is something, Jeanne, the evolution that we've seen here. Donald Trump now referring to the Russian war machine in multiple social media posts, including his idea to add a 25% tariff on India. How long can we assume Donald Trump will see the world this way?
You know, it's hard to assume. I try not to with Donald Trump. Anything can happen. But, you know, let's just think this through. So he imposes this tariff on India to 50% for buying Russian oil, which the United States countenanced not that long ago because it's capped. And India sent out a pretty fervent and strong message saying the U.S. and the Europeans are being hypocritical because the Europeans are the second largest importer of LNG from Russia. And they also are talking about looking to different partners. And so what that does in terms of the BRICS and everything else is one question. The other thing is, what are we going to do? Get in a frozen conflict with Russia at this point? Because there's two ways to end a war. You negotiate it out, or you arm. And listening to Rick, I think he's right. We may see the United States arming Ukraine, but the Ukraine has a big, big problem, which is population. It simply doesn't have the numbers to win. Now, is Europe and the United States going to go in with them? So I'm not sure how this gets us anywhere further than a frozen conflict with Russia, while we need to be competing with China, not to mention everything going on in the Middle East. I think Donald Trump was right instinctually when he came to office, and now he is looking very much like Joe Biden when it pertains to this conflict with the Ukraine.
He spoke to Volodymyr Zelenskyy today, and the president of Ukraine is speaking about that phone call. Apparently, European leaders were on the call with President Trump. Pretty remarkable. Right on my way from our brigades here, I spoke with President Trump, Zelenskyy writes on social media. This conversation happened after President Trump's representative, Steve Witkoff, visited Moscow. There's reporting, Rick, on the Bloomberg today that the U.S. is now also considering sanctions on Moscow's covert fleet of oil tankers, the shadow fleet, as it's called, and entities that enable them to operate. How come none of this has happened until now? We spent years in the Biden administration asking if we had done everything possible, if there were more sanctions to find, and it appears there were a lot more.
Well, we talked about that at the time, and we used to make a very clear statement that Joe Biden was trying to eke out a win, and you don't eke out a win when you're challenging Vladimir Putin. The entire approach that Joe Biden's administration took was do as little as you can for as long as you can and hope this all just goes away. And that includes the readiness for that administration to give arms to Ukraine, and also why you would not have hit Russia on day one with massive tariffs and basically roadblock their ability to sell hydrocarbons to the world. I mean, it's just, none of it made any sense at the time. We criticized the Biden administration for that. And honestly, I mean, Donald Trump is looking at others who are using Russian oil. He's commanded the Secretaries of State, Commerce, and Treasury to give him a secondary sanctions list of people who are currently aiding and abetting the Russian war machine, as he likes to put it now. And I think that will include China, but that will include other users in Europe, and they're going to have to face those penalties.
The deadline is Friday as we walk our way towards deadline day. Rick Davis and Jeanne Zaino, great analysis, and thank you both for the insights. Bloomberg Politics contributors with us on Balance of Power. Many thanks. An important conversation with regard to oil ahead. Bob McNally from Rapidan Energy is going to join us here on the fastest show in politics on Bloomberg. Balance of Power live from Washington as we keep our eyes on a soon-to-be empty chair on the Fed board, reporting today from Bloomberg that it could be a temporary hire, a fill-in on the Fed. The president's advisors encouraging him to nominate a temporary Federal Reserve governor here to fill the seat that will be vacated, by the way, 2 days from now by Adriana Kugler. And basically, the idea here is to buy more time. The president's going to be meeting with his advisors to play the name game for a future Fed chair, likely on Friday, raising a lot of questions about why a temporary role and why not just name the new, essentially, shadow chair now. It's a question we wanted to ask Michael McKee, Bloomberg's international economics and policy correspondent. He's at World Headquarters in New York. I'm trying to understand the psychology behind this, other than buying time. Mike, what would be the point of a temporary hire?
That's a very good question, and I don't have a good answer for you because I have the same questions. If you appoint somebody now, the Senate's out. They don't come back until September 2nd, and then you've got to get through the confirmation process. Now, the Bloomberg story suggests that they would put in somebody who is already confirmed and working in government, which would shorten the time period because they wouldn't have as much to fill out in terms of financial disclosure forms, and they might have sold off whatever conflicted assets they own. But still, you and I know that between then and the next Fed meeting is 10 legislative days. And for the Senate to take up a nomination, and get it through committee and get it through the floor, that we'd have to call the Guinness World Book of Record people, I think, for that.
Yeah. That would be a Christmas miracle, I guess. Does it suggest that the president is wavering on the short list that we keep hearing about? Why would he need more time? It seems like he's almost there.
Well, I'm not sure what he gets by more time as well. If the seat is vacant or if the seat is filled isn't going to make a difference to whether or not the Fed moves forward with rate cuts in September, October, December, because the majority rules there. And at this point, we don't know what the majority is going to be for in September. It looks like, given the jobs numbers we got last week, that some members are starting to now think maybe September is the time to cut rates. And if we continue to get data that suggests that, then whether or not there's somebody in the Kugler seat, the Fed will go ahead and cut rates. And if the Fed majority doesn't want to, it isn't going to make a difference either. So I don't know what the president gets out of this, more time to pick somebody, but he could leave the seat vacant and have more time to pick somebody.
Wow. Well, this is why we wanted to talk this out with Michael McKee. If they do go with the idea of a temp, Is there a short list for that role as well? Someone already in government checks all the boxes you already laid out?
There's not a short list because nobody was really anticipating this sort of thing. But if you start ruminating about who might be a possibility, you could think of somebody like Michael Faulkender, the Deputy Treasury Secretary, because he's been recently confirmed, so he wouldn't have much to do to update his paperwork, etc. And he's in a job that could be vacant for a while. And if a Fed governor is more important than the Deputy Treasury Secretary, you could leave that open. And if you weren't going to reappoint him to the Fed seat and keep him on the Fed, in theory, he would ask for his whole job back. But then he has to go through confirmation again to be Deputy Treasury Secretary again because he'd have to resign. So none of this makes a whole lot of sense. But as somebody said to me, it's Donald Trump. You just never know.
McKee. You laid that out perfectly. Faulkender, fascinating. Remember that when it happens. Michael McKee said it here first. Bloomberg International Economics Policy Correspondent. Many thanks, Mike. As we keep our eyes on the White House for news about Russia, there's already been a lot. In fact, the headline on the terminal, U.S. weighing Russia oil sanctions as Trump hails envoy's Putin talk. Steve Witkoff, the envoy, sat down with Vladimir Putin for 3 hours today. There's been a lot of talk here. Great progress made, according to the president, but we don't really have a sense of exactly what was discussed and whether there could be an announcement on a deal here before the Friday deadline for secondary sanctions. If you're with us on Bloomberg TV or YouTube, you see the truth from President Trump earlier. Great progress made, but we still don't know exactly what was discussed. And we also are asking a lot of questions about not only the impact of potential secondary sanctions against Russia if no deal is made, but a new 25% tariff on India, which, of course, is buying Russian oil. The president talking about this as well as India funds what he refers to as the Russian war machine. Add the other headline, Bloomberg reporting that the U.S. may also slap sanctions on Moscow's covert fleet of oil tankers, the shadow fleet, along with the several entities that enable them to operate. We wanted to get on the line with Bob McNally to get a sense of what this could all mean for supplies and prices. Of course, the force behind Rapidan Energy Group, Bob McNally, the founder and president, and former White House energy advisor to President George W. Bush. Bob, it's great to see you. Welcome back. Crude oil is not rising. In fact, it's lower as we have this conversation. West Texas Intermediate down just about 10 cents. Not a big deal, but $65 a barrel does not sound like a market that's worried about this. Bob, how do you see it?
Hi, Joe. Good to be with you. No, you're right. The market is taking this in stride. You know, it's the old Washington saying, make them sad, make them glad. In the last few days, the administration was talking about 100% additional secondary tariffs on India, and they got 25%. And so that, in a way, is lower. I think that that made folks feel a little more comfortable. They think at 25%, India may defy the United States and continue to import Russian oil. And if they continue to import, we don't lose the supply. And if we don't lose the supply, we don't have a price increase. And, you know, this is all occurring as the oil market generally, Joe, I think is starting to transition from this tightness we've been in all summer and spring. And many barrel counters at Rapidan included. We expect as we get into the fall, balances will loosen and soften up. OPEC Plus bringing back more barrels, the end of the gasoline season, et cetera. So there's this coincidence, if you will, with this expected softening, and then the secondary sanctions so far being less severe than had been threatened.
Interesting. If, in fact, India chose to follow the president's lead here and stop buying Russian oil, could the U.S. replace it?
Absolutely not. We do not have spare production capacity. That means the ability to sort of crank up millions of barrels a day, even hundreds of thousands of barrels a day in days to weeks to months. We don't. Even if we started drilling and completing all we could as fast as we wanted to, we couldn't do that. Only Saudi Arabia, UAE, some other smaller OPEC plus countries have that spare production capacity. So we can't. The real question would be, can China or other importers to sort of take those Russian barrels? If Russia could no longer export 1.7 million barrels a day to India, would China take up the slack? And if they couldn't, if Russia couldn't find a home for those barrels, they would have to shut in. And then to your question, the only real offset would be in Saudi Arabia and the UAE.
Really interesting. Bob, we've been watching the rig count drop fairly precipitously since the beginning of spring, as a matter of fact. What does that mean when we talk about drill, baby, drill? Production levels have been at record highs for some time. In fact, it looks like the rig count most recently topped out at the beginning of September 2024. It's been falling in the past couple of months. Are we going to see a slowdown in production the second half of the year?
We will, and I think into next year as well, Joe. It's more chill, baby, chill. It's evident in the rig count data. It's evident when you go to Texas and you go and you talk to the oil drillers, oil producers. We've seen Diamondback Energy speak publicly on this. Look, they've been under this cloud of $50 oil, right? And this mantra of get oil prices lower to beat inflation. Now, President Trump has begun to increase his definition of low oil prices. It's moved to the high 60s now recently. So there may be some relief coming on the margin. But no, this isn't. The shale sector is fearful of this oversupply that I just talked about. They're not the only ones that are looking into next year, seeing oversupplied markets, demand not strong enough, supply still coming, OPEC plus adding barrels, the prospect of lower prices. You know, and as oil prices go lower, shale oil producers are the first line of collateral damage, if you will. They're the ones who begin to restrict activity, and their investors don't want them contributing to that oversupply. So there's caution. They've seen price collapses in 2020, 2015. They haven't forgotten those, so they're very cautious, and that's why we're seeing the pullback. So I think we're looking at sort of flat lower 48 production. Now, we are bringing on some new projects in the Gulf of Mexico. So, and then elsewhere in Latin America, Argentina, Brazil, you're seeing Guyana, more oil. But in the U.S. sort of shale patch, it's more chill, baby, chill, Joe.
I don't know if you came up with chill, baby, chill. That's really good, Bob. But to hear you say the shale sector is fearful is not consistent with the language you're hearing from this administration. Is this what you anticipated? And what does that mean for crude oil if that drop in production does continue? Where are we in terms of prices by the end of the year?
Yeah, well, so just to be clear, the shale sector is thrilled with what President Trump, the NEDC, the Dominance Council is doing in terms of their regulatory agenda, permitting, and so forth. All this is very positive. And remember, it could have been a lot worse had the other candidate won for them. So I don't want to downplay the happiness of oil producers with this current administration when they look down the road. The problem is, as they look to the end of this year and to next year, they see oversupplied markets, they see lower oil prices, they hear a president who so far has been saying he's more interested in getting oil prices down to beat inflation and to hurt Iran and Russia, even if it means pain for the shale sector. So it's more of a near-term type of thing. Joe, we're pretty bearish unless we get a major geopolitical disruption, which isn't our base case. We see oil prices heading well into the 50s later this year and certainly into next year. And that is not going to be a fun prospect for shale producers. I hope we're wrong.
Wow, fascinating. And what that will mean for production could be really important. Lastly, Bob McNally, we've got a tariff deadline kicking in tomorrow. Kind of amazing how many deadlines we're talking about, not to confuse that with secondary sanctions against Russia. These would be the reciprocal tariffs that the president detailed at the end of last week. Does that do anything for oil or gas prices from your view?
It does. It puts them under more downward pressure. Until recently, the macro data, the jobs data, the financial market data was pretty supportive. There was a sense we had dodged a bullet after those Liberation Day tariffs and the swoon that you saw in financial markets and sentiment, really. Yeah. We sort of recovered and gathered ourselves and collected ourselves in the summer. But now with that payroll downgrade, with concerns about these tariffs now going into effect, 10 to 15% isn't 50%, but it's not nothing. We're still at post-Smoot-Hawley highs. And so I think barrel counters, as we look into this later this year into next year, and you start to factor in this returning supply against this more fragile economic outlook, it's sort of exacerbating those concerns, those clouds that had been on the horizon about oversupply, too much oil, and downward prices. Final thing let me say, though, if President Trump is going to put Russia and Iran under pressure on oil, that could be just what the doctor ordered. In other words, it could prevent next year a price collapse that would hurt the shale sector. So there may be a silver lining on this cloud for President Trump anyway.
We learn something every time we talk to Bob McNally. Really appreciate it, Bob. Founder, President, Rapidan Energy Group. Thanks for bringing your experience, as always, to Balance of Power. We'll meet you back here on the late edition that starts at 5 p.m. Eastern Time. Big announcement, as we told you, coming from Apple at the White House. That's where we'll pick up our coverage, with Apple shares rising toward the closing bell now, up over $11, almost 6%. I'm Joe Mathieu. This is Bloomberg.